Welcome, everybody, to another edition of Wall Street Hackers. I'm your moderator, Nick Palavita, and would like to thank everybody who's going to be listening on iHeartRadio and Spotify, our show dealing with what's going on in Wall Street. With that, of course, we have a gentleman who's a graduate of UCLA in economics. He also received his law degree at the University of Miami and his master's in business administration at NYU in New York, spending 17 years in the great area of Wall Street. We're going to bring in the hacker himself, Peter Bennett. Peter, take it over. Oh, by the way, Kim has arrived, so she can
good.
Bring up those slides.
Nick of time, great.
In the nick of times, make sure we have our slides ready for Peter.
Right.
Once the dividend slide.
So,
there it is. I love this
first slide. So welcome to Wall Street Hackers. We're on almost every Thursday. You'll see a new edition coming out at 1 o'clock. And so we'll bring this first slide up right away. This is our favorite slide. Kim, if we could bring that up. And especially for those new viewers who aren't able to see our few charts, we don't go with many charts. This is the S&P 500 performance since 1973 to 2022. And it compares the S&P 500 to dividend growers and initiators and dividend payers. And basically, dividend payers and dividend growers blow away the performance of the S&P 500 over that 50-year period. So if you put $100 in 1973, by 1922, you would have $4,000 rounding off. If you bought dividend payers, you have $8,000, twice the performance. And if you have dividend growers and initiators, you'd have $13,000, which is more than triple, obviously. So we can take that first chart down now. But that is one of the major themes of our show. If you're going to go with stocks, you better have defensive stocks, but you also want to have dividend growers and dividend payers in the long run. That will be the place to be in the future, very likely. So we always begin with the markets, and I usually don't begin with this, but I want to start with a quote from Larry Summers. He was the Treasury Secretary under the Obama administration. He's the president of Harvard. But the thing is, he has accurately predicted that the Fed was behind the curve in 2022 and throughout 2023. He's been pretty good about predicting what's happening in the markets. So here's his quote. He said, with the general evidence of robustness in the economy, I think the lower risk strategy is for the Fed to raise rates in June. That may or may not happen, by the way, but the market is up and down on that. But he said it's a close call. And if they don't raise rates in June, I think they have to be open to the possibility that they may have to raise rates by 50 points in July if the economy continues to stay way hot and if inflation figures are robust. So this is what we've been saying for a year and a half now. The Fed is behind the curve. Inflation is out of control. And the market keeps thinking everything's going to be rosy. We're going to control inflation without a recession. And they're expecting actually decreases in rates, which I think is almost impossible this fall. So here's an interesting chart, too, the only other one we have today. And Kim, if you can bring this up, the other chart is profits are getting squeezed. If you don't have it, I can just hold it up. This is the first one you're putting up, Kim. Okay, so I'll just hold it up. So this is all you have to see is direction. So this is a year of profits for This is a year of profits for the S&P 500. And you could see the direction down, 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 up a little bit. But basically, profits keep falling. And that was the point of that chart. So what's happening is inflation is affecting profits because interest rates are going up. And this won't be a short-term process because as companies need to refinance, as the economy slows because of interest rates, that's going to affect a lot of different industries. That chart, by the way, was from Kiplinger. So you might say, well, that chart only went through 2023 third quarter, but here's what Morgan Stanley said just this week, 2 days ago. Morgan Stanley warns of a 16% drop in profits for the S&P 500 this year. Quote, the boom and bust period that began in 2020 is currently in the bust part of the earnings cycle, a dynamic that's not yet priced in. So that is the point. As interest rates affect economy and companies, profits are going to be hurt, and the S&P 500, other stocks are going to be hurt by to different levels depending on the sectors. So what does this really mean in terms of investment? I see two scenarios, and to me, they're the only ones that seem likely, but either one could happen. And, there's never a promise. The market could go to 1 million, Bitcoin could go to 2 million tomorrow. Nobody knows, but this is my call. And I've been pretty good over the years. And since the shows have begun about calling the markets and most of the stock picks and everything else. So scenario one is the market remains range bound for a year and possibly much longer, possibly for years. Why could that happen? One, the Fed has said it. They've said higher for longer. The market is delusional and think, it's going to be lowering rates any day now. But the Fed strategy is keep raising and then work off inflation over a long period of time. That's what they've told us. Number two, studies have shown that when inflation gets to this level, it surprisingly takes 10 years on average to get rid of it. Once you have that mindset, people expect raises, it gets into the economy. And so that's a very good reason why I'm not expecting inflation to drop all of a sudden. Number three, the reason it may not drop where it might do, quickly is because the market tends to be delusional. Why? One, philosophies. They buy the dips, never sell, always hold on, it'll come back. But also look at the incentives. Portfolio managers, mutual fund managers, institutions that are basically, one, selling their product, but two, they don't want to underperform or take a risk of underperforming. So if they're bearish and the market goes up, then they're underperforming. And so that's scenario one. The other scenario, which is to me the only other scenario I see likely, even closely, is the market does fall, perhaps 15 to 20% or more, even potentially this year. One, corporate earnings are declining, and that's what you're buying when you're buying a stock. You're buying a flow of cash and profits. All these companies' loans are coming due, and debt. Some this year, some next year. So sooner or later, their expenses are going up because of that. But the other thing is energy, and that's the big thing. The energy inflation looks like it's under control because energy is down. Last I looked, about 6% year over year as of a few weeks ago. But energy could go up a lot this summer and probably will. Demand is at all-time near highs. World demand, U.S. demand. The world had slowed down on energy use because of a temporary COVID slowdown in China, and also because it was a warm winter in the developed countries. But these are going away. So if energy goes up much more than the market thinks this summer, then that would really scare people about inflation, scare the Fed, and that could just tank the market. But if it doesn't go up enough to scare the market this year, my big concern, which I repeat over and over, it's so shocking that oil and gas companies have been underinvesting by an estimated 40%, too little capital in order to maintain oil and gas production where it is. 40%, that's a huge gap. Imagine if tomorrow we had 40% less gas and oil. Well, it's not going to happen overnight, but these projects take 5 to 7 years. Why are they doing that? Three reasons I've discussed, and now a fourth I just came across, which is obvious too. One, oil and gas companies are spending 10% roughly of their budgets on environmental projects. So that's 10% they're not putting into oil fields or gas fields. Two, Obviously, the U.S. especially and many other world governments are doing everything they can to prevent the oil companies from succeeding in terms of production, limiting access to land, and also especially regulations, slowing projects. That's a big reason why they're not producing as much. Number three, if they're in a terminal business, which I don't think they are, but let's say they're saying, well, in 20 or 30 years, we may be around, they would not want to keep investing until the last day. They would want to return some money to shareholders, buy back shares. So those are three reasons we've talked about for over a year now. It's shocking and that we're underinvesting that little since 2015. But reason four, and this is becoming a stronger and stronger reason, it's becoming very difficult for oil and gas companies to get financing. Banks and many other institutions are becoming more and more ESG oriented. So they're holding up loans or making it more difficult. Maybe they're charging more. What does that mean? If you're running an oil and gas company, you go, wait a minute, I have to have more capital on hand in case I need money because I may not be able to rely on the bank, or it may be too expensive, or debt. And the other thing is, so then I'll be more conservative on future investment because I don't want the whole thing to go underwater because all of a sudden I can't repay my last debt, which is going to roll over. So sooner or later, the bottom line is on this, energy is going to catch up. It might be this year, it might be a few years, but if these projects take 5 to 7 years, even if there was a change in attitude by government, it's going to take years to catch up on what should have been invested since 2015. Okay, next segment, 5 most interesting stories of the week. Number one, the SEC has now launched lawsuits against Binance and Coinbase based on the theory that crypto is securities. Well, crypto cheerleaders have been hoping for regulation so they could get, quote, clarity, but this is not what they wanted at all. This is really bad news for crypto. Now, crypto is going to have to be in compliance with SEC regulations, and that's going to cost a lot of disclosures. Some of the crypto companies may move offshore in reaction to that, but that's not making you feel very good about the crypto industry. And then also the SEC's lawsuit against Binance in particular alleged extensive deception. So that doesn't give you much assurance. And it's another big problem area after the FTX fiasco. So to sum it up in terms of Wall Street hackers' attitude, we've been saying for years now, crypto could be worth $1 million or zero, but it's very likely to be zero. There are now 22,000 different cryptos. Every day somebody develops a new crypto because they say, oh, I'll print money. But governments cannot essentially allow people to print money because it's just chaos. They can't control it. And they're basically creating wealth and money just by saying, okay, here's a coin. Bitcoin is supposedly the most reputable because a guy named Satoshi Nakamoto promised never to issue more Bitcoin. Only 2 problems with that. 1, nobody knows who Satoshi Nakamoto is. And 2, nobody even knows if he exists. So why is Bitcoin better than the other cryptos? I have no idea, but it's not good. Finally, look at the real concrete issues. 1, crypto is now taxable. It didn't used to be taxable in the United States under the new regulations in the last year. And also, it's not secret. So what's the advantage of crypto? I don't see a lot, but and here's the bottom line. Many countries are developing their own digital currencies. A lot of countries have them. Many more are getting close, and many, many more will have them eventually. So if you can get a digital currency backed by a country, and you know who the country is and that they're reliable, versus somebody like Satoshi Nakamoto or somebody who is in a foreign country and may or may not be complying with the law, why in the world would anybody want a crypto when they could have a digital currency, except for maybe it'll help in a gaming situation, but that's not going to support, $26,000 a coin for Bitcoin or any of these other points. Interesting story number 2. According to Challenger Gray, nearly 4,000 Americans lost their job in May because they were replaced by artificial intelligence. We've been talking about this for the last few weeks about AI and the dangers, both in terms of misinformation and job replacement. But this is the first time that AI is being blamed specifically for workers being unemployed. A spokesman for Challenger said, what I just said. This was the first time that AI was listed as one of the factors behind layoffs. Earlier this year, Goldman Sachs predicted AI-powered bots could affect 300 million jobs. They didn't give a time frame that I saw on that. They probably did. But McKinsey Consulting, I think one of the best consulting company in the world, has already said that by 2030, 400 million jobs, or about 12% of all jobs, are threatened by AI. This is going to be a dramatic change, and AI is coming. Story number 3. Last week, we talked about rising sea levels in many countries, as well as falling cities. We discussed that also a list of the top cities that are threatened by rising sea levels. Miami is number 1, partly because parts of it are sinking, and it's also very flat. In the world, New York, I was surprised, is now number 3. Why? New York is facing the issue of rising sea levels, but also it's sinking 1 to 2 millimeters a year. And many scientists are saying that it could be the weight of over 1 million skyscrapers and buildings. So the weight may be pushing the land down, which will accelerate the effects of any rising sea levels. But one of the other cities was Venice, and everybody knows that's one of the cities that's threatened. It's been in the news forever. But what's interesting is Venice is now building and finally getting near completion of a network of underwater dams. It's a huge network that is in a lagoon outside of Venice on the Adriatic Sea. And it consists of 45 dams, each one 65 feet long, that can rise and fall, and they're manually operated. So if the tides are too high, they can actually raise the dams and ships can get through otherwise. The project was supposed to be built in 2012, completed. Now they're looking at 2025 for a full completion, but it's more in test mode now. And it will cost €6 billion when it was originally forecast to 1 billion. So much for government budgeting. Anyway, hopefully it will work. Venice is worth saving. Story number 4, Harry and Meghan's worldwide privacy tour, quote, is on a collision course with real world consequences. On Tuesday in Washington, the Heritage Foundation filed a claim in federal court to unseal Harry's immigration records to see if he lied about his past drug use, which included, according to his book, memoirs, marijuana, magic mushrooms, and cocaine in his memoir, Spare. So if he was fraudulent on his visa application, he could be denied entry into the United States. And I don't think he put on his visa that he's used these drugs, but I could be wrong. My guess is he denied any drug use. Finally, New York City is now filing a lawsuit against 30 upstate localities that each issued emergency orders aiming at barring the Big Apple from housing migrants in hotels in upstate jurisdictions. Mayor Adams announced a plan to begin busing migrants to private hotels in their areas. It's a little confusing because I thought New York was supposed to be a sanctuary city. And I just wonder, it was okay when Texas and Mexico had all these problems, but New York is now seeking, and I don't know where they are in it, to become not sanctuary city. It's like, what? What happened to the wonders of being a sanctuary city? Anyway, it'll be interesting what the courts say about busing migrants out of the city. And I would add, by the way, he was very critical about Texas busing migrants to New York. So I don't quite understand the philosophies. Anyway, let's take a first quick break, and then we'll be back with the dividend pick of the week and our panel discussion of the week. See you soon.
One of the things that business owners forget a lot is to prepare for their own retirement.
Hi, my name's Nick Palavita, and today I'm with a very special guest, a certified financial planner, a chartered retirement plan specialist, and president of National Pension Partners, Max Culiet. Max, tell me what you do at National Pension Partners.
Well, Nick, we help successful small businesses and professionals put together retirement plans that provide them the maximum retirement benefits and big tax deductions at the same time.
Well, how do you do this?
Well, we get on an internet conferencing system with the client. We review their goals, what they want to accomplish, and then put together strategies to help them in implementing a retirement plan that benefits them, not everybody else.
Well, that sounds really good, but how much does this cost?
Well, it's really not bad because the first consultation is free. That allows us to go through and discover whether this strategy works for that business and for you as the business owner, and helping you maximize your retirement.
Well, Max, how do we get this free appointment?
It's really pretty simple, Nick. You can either go to our website below or call us at 877-252-1692, and then we can set up a time with either myself, Nick, or one of our other retirement plan specialists, another CPA or advisor in the office, to go over this with you and make sure it fits for you.
Hi, my name is Lewis Haupt. I work with National Pension Partners, and I work with businesses to allow them to put the maximum away that they can for themselves and to save taxes.
Hi, I'm Brad Coyle, and I'm the brokerage manager at National Pension Partners. We're always analyzing plan fund choices in order to ensure the participant's success.
If you want more information on how we can help you and your business put more money away in a retirement plan than you ever thought possible, contact us at the website below or call us at 877-252.
Okay, so
We're back.
We're back. What to do? As always, own dividend stocks if you're going to own stocks, and I think you should own some stocks, especially own energy and especially pipelines. We've been covering that for a long time, in terms of previous weeks. You can tune into some of our old shows, but we'll get back to the pipelines and energy because that is, to me, the place to get gold, basically, and be very defensive because, I don't think it's a good time to be aggressive in the market, that's for sure. So dividend stock of the week. As I said, we've been focused on energy because it's a key part. It's about 24-25% of the Wall Street Hackers portfolio, and bonds is another big part. But one area that is very interesting to me is grocery-oriented REITs. It's one of the few areas where I think you might get what is ideal: dividends or dividend growth, safety, and dividends, a reasonably high dividend, and dividend growth and safety. It's hard to get all three, but I think there's value there, and I really like the sector in general. So the next 3 weeks we'll cover that. This week it's a kind of mediocre pick for me. I'm only 0.1%, but it's the other next 2 weeks I'm going to discuss more interesting picks. But I don't want to put down the pick, but there's reasons why it could work for some people. It's VLGEA, Village Supermarkets. And I view it as a bond substitute. It has a 4.5% dividend yield, which actually exceeds bonds. It has a great cash flow. We always look at price over cash flow. Price over cash flow is 4.7, so it's actually earning over 20% cash flow yield. And you say, wait a minute, 4.5% dividend, great cash flow yield. Why not? And by the way, I forgot to say what it is. Village Supermarkets is a very well-run chain in the Northeast United States of basically supermarkets. So why not a bigger allocation? Because it's family-owned, they tend not to increase dividend, and they're probably not going to sell, although if they sold, they'd probably get a real premium price. But if they don't sell, I just see it as a steady Eddie 4.5. But the purpose of it could be for some people, let's say you have an IRA where you're facing minimum distribution in the next few years, as an example. Well, it's hard to buy a 20 or 30-year bond because that will be subject to growth or capital appreciation or decline depending on rates. And also you're going to have to cash it in at some point. So with this, you can own the shares, and it might work perfectly if you're in an IRA situation. Again, next 2 weeks, I'm going to get into one especially big allocation for me, and two, I think, really interesting stocks that are internationally oriented and grocery oriented, and I think the market's missed some of them. So the panel discussion of the week, and we actually have more time than usual, not much, but more time than usual. So the question is, should TikTok be banned? Should TikToks be banned and TikTok? No, I'm kidding. TikTok will allow. TikTok, I'm not so sure about. So should TikTok be banned? And also, if it should be banned, why isn't it already banned? Quick background. One, TikTok is based in China, And also, many people say it's controlled by the Chinese Communist Party. 150 million Americans use TikTok. Montana recently banned TikTok, and the federal government is considering, debating a ban on TikTok too. TikTok does say it doesn't share data with the Chinese. However, India banned TikTok in 2020 for security reasons. And according to Fox Business, India asked China to delete all of the data on its citizens, and China responded, no, we don't want to do that because it could be very useful in a time of war. It's like, what? Okay. So, question, should TikTok be banned? And also very interesting, if it isn't, why isn't it already banned? Nick and Kim.
Before I get into it, I want to read this since we're also on radio now, that the stock picks, et cetera, and what we discuss is for educational purposes only. Seek financial advice for your own situation. I wanted to do that verbally because it runs on the bottom ticker. Peter, when you're talking about
Make sure
this,
to do that every
but
show.
on
Nick.
radio, people can't see the bottom.
There's no
ticker.
disclaimer. That's right.
So
we don't
I'm
promise
verbally
anything.
doing
Do our
the
best.
disclaimer. All right. So just to keep us out. Now, in terms of TikTok, that's an easy one for me. No, it shouldn't be banned because we in the United States have a First Amendment right, freedom of speech. And this is just a pretext, for Facebook, Twitter, and all the other social media sites to shut other sites down. It has nothing to do with national security. Who's eating this garbage? Not me. It happens to deal with the pressure that social media companies are putting on other companies, including ours, by the way, to shut us down. Facebook already shut me down big time, okay, because they don't want to have competition. Has nothing to do with national security.
Oh, interesting.
And when they took us down, they said we're violating the terms of service. Yet at the same time, and just hit the Wall Street Journal today, pedophiles are rampant and pornography is rampant on Facebook, and they don't ever shut it down. So don't hand me as what is it that said Judge Judy said? Don't piss on my leg and say it's raining. Okay.
Thank you.
So that's my thought on this whole thing. It's all garbage.
I think anyone who believes it should be banned is a complete idiot. And that's what they bank on, is a bunch of weak minds in this country when they try to produce fear about one social media site. When, Peter, when you talk about how jobs are being replaced with AI, all of these devices are China built because they replaced all of our jobs in this country to China and India building these devices. So if your fear is you're going to be, data captured by China, and they don't care. They don't care. But let me tell you what Facebook is doing now. I woke up the other day and went on my profile. They changed my title and gave me a title they wanted me to have in my profile. They went into my profile and gave me a new title called Rising Creator. And I can't change it. Okay. So now they're calling me something I don't believe I'm a rising anything. I've already believe I've risen to everything I can do.
Well, that sounds like creator sounds like a pretty high title if you look at the biggest creator, right?
Oh, thank you, Peter. But I'm already a CEO. I hire creators.
No, I know. I was joking about
but hear me out on this. They not only did that, they not only invaded my privacy and went into my profile and changed it. I posted something the other day, and I know what I post and don't post. I post a lot, but they went in and changed my post to an advertisement. So
Really?
I posted something that somebody said, and then I was reading a few of my friends going, hey, I posted something, but Facebook changed what I posted. And I go, that's crazy. Why would they do that? So I posted something like inspirational that somebody posted, and I put, amen, that is beautiful. And then they took my post down with the amen, that is beautiful, and put an advertisement in there.
Well, the arrogance of that.
Facebook invades our privacy more than TikTok. TikTok doesn't do this. Now, let me tell you why they fear TikTok. And it's right here in some documentation and research that kind of suggests, what are the differences? And if you read this, it's going to tell you that TikTok is a platform of targeted content and loose ties. In other words, it's, anybody can get out there. You don't have to be friends to see what's going on out there. A post-social media network that doesn't rely on your friends to keep you engaged and entertained. Rather, it's based on recommendation, like this is the type of TV show you like, or this is the type of humor you're like, which is the flip side of any surveillance that belongs out there, which means what? It means that your government can't surveillance everything you're doing. So that's why they don't like TikTok, because it prevents their government from being able to surveillance you or your government. Our government doesn't like it because they can't surveillance us, but they can if they really use it right. They don't know how.
Well, so
They
there's
can,
no
they
concern
can
about,
surveillance any of this.
what about the
They can
security
know.
concern with China? In this case, you're not concerned, either of you?
No. Okay, Peter, do you use this? Do you have one of these?
Yeah.
Yeah,
No, I'm not
that's
concerned.
true.
Peter, how often do you use your computer?
Kim's holding up an Apple phone, I believe.
It's, as I said,
Yeah, an
all
Apple
fake
phone,
news.
but I've got others. I've got
But wait, but Apple has that. My dad.
Yeah,
although-
then you should also be
all
concerned about
Peter,
Apple.
all components that go into your devices, your computer, everything, all
Oh.
is built in China.
Oh, you're right about the components, but what about the data? They don't have.
Well, what
access to
about the
that.
data that
So
Facebook just
okay,
grabbed
so
that
they
can
put a
turn around and give to
microchip into
China?
your computer and they
Come on.
can scan all that data.
They could. You're right.
Yes, Peter, come on.
Peter, come on, man. It's
Yeah.
all fake, meatball.
It
All
could
the
be.
data
No, it's
that
funny because I
is
was going to
being
argue
gathered
that
in San Francisco could easily be transported over to China tomorrow, and they're gathering all our data in San Francisco as we speak, and it can all be transferred. So this whole idea of big national security fraud or security
crap.
concerns.
interesting. You know
one,
what? You swung
show
me
me the
'cause
money, baby.
I have to say, you both swung me because
No,
I.
it's all about
My
Facebook.
argument was
trying
going to be
to
the
get rid
government's
of
moving at a
competitors.
glacial
That's
pace for this, but at least I see both sides now. I mean, on one side, India, maybe it was influence of other social media that caused India to ban it, but it is a little worrisome that China said that. If I believe that's what they said, I heard it on the news. If it was true that they weren't going to release data because of the usefulness of it, but you know what? I guess in the end, I would say, if we're going to, there are a lot of places we should be cutting back in China, but now I'm thinking maybe this TikTok thing is just a fake kind of shit.
Well, Mark, you're a journalism major. Maybe you can weigh in on this.
Oh, we can't hear Mark.
We can't hear you though, Mark.
I don't know if he knows he's on. Sorry.
Mark, we can't hear you.
I don't think Mark knows he's on. I could be wrong. Anyway, we're wrapping up the show anyway, but that was an
Can you
interesting.
hear me now?
Yeah, we can hear you.
You want to go quick?
Now, the
Yeah.
only thing I was going to say is that because I had to tease you, Peter, I actually popped in for the exact reason because you said that you were hearing it because you heard it on the news, and I'm not knocking the news because I'm part of the news and a journalism major, as Nick likes to tease. But there can be misinformation in the news as well.
Absolutely.
Just like there's misinformation on
You know what?
Clubhouse.
That's why I said I heard it on the news. I wasn't able to double check it. Normally on our show, I want to double check everything I'm reading or hearing, and I dig deeper into it. And that was my final conclusion either way. My conclusion is I don't trust the news either way in the United States. The liberal media will not even report on a lot of stories that they should be reporting. The conservative media slants everything. So they'll tell you more of what's happening, but they slant things so much and not even cover some stories. The liberal media, I think, is worse, but I think they're both terrible. And they're dividing the country. They're dividing our politicians. If you're a liberal or conservative politician, then you're getting your news from liberal or conservative news. And the problem is that the truth is between the two. As the truth is, a lot of these are complex issues, complex answers, and it's not like black and white like the news.
No,
So
it's not that easy.
we try to discuss things more in depth, and we're going to have to wrap up because we're at the hour. But thanks for watching. As Kim always says, get healthy and get wealthy, and we'll see you next Thursday.
Bye-bye.
See you soon.